What's up, you amazing people out there? This is day number 8. Can you believe it? We're 8 days in and we're still making gains. Now, not great gains, not massive gains, not obscene gains, good gains. Small wins over time lead to great things. The more this account grows, the bigger the positions we'll be able to place, the more money we'll make faster. Anyway, so I actually wanted to kind of shoot to you why I started doing this. I was experimenting with the Webull accounts. I have several accounts, and the Webull account was my, I'm trying some kind of risky stuff on it, and I've lost some money in there, and it got pretty low, and I needed to get it back up. So now I've gone back to risk management and finding good plays, 1,000%ers. I need to get it back up so I can continue to experiment with it. But now I think I might just keep running it as long as it shows interest on how to grow a small account. But disclaimer. This is for entertainment and educational purposes only. I am not a financial advisor. Following the things that I do could very well make you lose your money. You have to be disciplined. You have to hold and save the account. You have to get out of things that are going against you. You can't hold and hope. It's a terrible thing to do. But either way, we're going to talk about price direction real quick. So this is a fundamental. There's a bunch of people, like literally within the last 4 days, have messaged me about what to look for in the market. So we're just going to talk about price direction real quick. All right, so this is SPY. SPY is actually a tool. We'll talk about a tool, and we'll talk about price direction at the same time. So anyway, SPY is the S&P 500 ETF, right? So this thing is made up of 150 different companies in all separate sectors. All right, so if we see SPY just taking this massive dump at any point in time in history, but specifically now, S&P is taking this massive dump, that means there's 150 different companies that are also dropping at the same time. That's what causes this to go down. Now, 150 companies all have to rally back up to where they were before in order for SPY to get back up to this 340 range. It hasn't done it yet. But there's a thing called leaders and laggers. So the leaders were the tech market, which started this bull run. Tech market started to fall off, and the lagger jumped in, which was the airlines. It was the airlines, and there was quite a few other companies that did it too, but the most noticeable was airlines. It started to rally, and it's making really good moves. Now, what's lagging? So based off of the things that I've been looking for, it looks like insurance and banks are lagging at the moment. They haven't made it up to this first initial bounce after the first dip. So we're looking in price direction. This is a bullish sentiment, or this is a bull run. So we can bet that the market's going to continue to go up. If it looked like we were a week or two of downtrend, then we would start to buy puts, or we wouldn't try to buy into the long run because we might have more downside. So price direction is, if it's going down, follow it down. If it's going up, follow it up. Don't ever try and go against the trend. You'll lose, and you'll never guess the top. You might get lucky. A couple of people will, but most of the time you'll never be able to catch the top or catch the bottom. So don't try for it. Just follow the wave. The wave's going up, go up. If the wave's going down, go down. Sell down, buy on the way up. Don't be crazy, okay? So anyway, that's price direction. That's just like a fundamental thing you need to keep in mind, price direction. And so let's add in another one right here, risk management. Risk management is when a stock or a position that you got in starts to go against you, getting out as soon as you possibly can. Set a mental limit. So if 10% is a limit for you, and you throw $100 at a stock, you lose $10 of that stock. Sell it, get out. Keep your $90 so you can trade another day. Don't throw all your money into hoping. Don't hold and hope. It's the worst thing you can do. I did it many years ago when I first started doing this and lost tons of money, until I finally figured out what risk management was, how to hold on to my money, and how to get out if I was wrong. Because you will be wrong. You will lose money in the stock market. That's also something you need to really consider whenever you get into this. Don't be sad. You're going to lose money. Millionaire traders lose money. Warren Buffett loses money. Warren Buffett lost a bunch of money. Warren Buffett sold the bottom on airlines. Can you believe that? The idol of the stock market sold the bottom. He bought at the top and sold at the bottom. This is risky business. But if we employ risk management, we don't have to lose our money. Right? Set the mental stop, and the stop is if you get down 10%, get out of the trade. hold on to the 90% to trade another day. So that kind of gives you an example of what I'm looking for. And I was telling you that I think that insurance companies and the banking market still has room for another big jump, another big gap up. In order for SPY to get all the way back up to where it was before, we need several other sectors in that 150 companies to rally. And once we rally, we'll be back to the top. And then what happens from there, I don't know. We'll just keep riding the wave. So anyway, that gives you an example of a tool. This is a great tool. Keep SPY on your watch list if you don't have it already. And look for price direction. Price direction is a very, very, very important thing to follow. So what else do I have on my list here? We're going to go over day number 8. Yay! I shot you the disclaimer. All right. Price direction, we talked about that. When to buy and when to sell. That's a really good point. When should you buy something? You don't know. You don't know when to buy. I create these lines right here. All these lines right here are support and resistance lines. I look back in time to try and help me figure out what's going on in the future, and I draw these lines to help me figure out when we might have a bounce. Now, like I was saying before, this is where we get this discipline and where to get out. So let's say this stock in particular had a run up, and I was looking for this line to be support. If the stock hits this line and it starts going up, I buy in. If it starts pulling back and breaks out below this line, I have a 10% stop limit for my mental stop. So if I go below this line and I lose 10%, I get out. If it turns around and keeps going up, oh well. I'll find the next one. We'll try it again. If it goes below here and I'm like, oh, I'm sure it's going to go up, it'll go down even more. And then I'm 20%, 40%, 70%. Oh my God, I've got $5 to try and trade with later. That's not the way to do it. Just be diligent. Be super diligent. If it starts to go against you, get out. Get out. This is the stock market. There's thousands and thousands of different stocks in here. You can try every single day to make a win, and you eventually will. It is the law of numbers. So anyway, when to sell. Okay, so you have to set a target limit to sell. How much do you want to make? It's not really how much do you want to make. It's how much money do you want to keep, because these things will get on a big run and they'll turn around on you before you know it, and they'll drop off really fast. So what's a good range? These are high, okay? So average long term is 2%. So if you can make 5 to 10%, you're doing extremely well, extremely well. And if you try and do 5 to 10% and compound your money, and you do it day by day, you'll make some pretty gosh darn money, right? You compound it, it'll just keep growing. 5% compounded over a short amount of time. Woo, boy! It all depends on how much you start with. But anyway, what I look for when to sell is I'll find a resistance line. I will look for a resistance line. If I buy into something and it starts running and it breaks my resistance line, like pretty quick breaks my resistance line, I'll hold on to it for a little while until I see the first few red candles pulling back, or sales volume or selling volume. Then I'll get out. I'm happy with that. I don't need to try and make a home run in every play. Some of them you will. Some of these green candles will just freaking rock it. They'll just go crazy up, and once they get too big, get out, because they're going to come back down. That's typically what they call an overreaction. The next place where I get out is if I get my support line, I get a bounce on the support line, I hit the resistance line, and it starts to come back down off the resistance line. It's probably going to come back down to the support, so I'll give back all of my profits. So I'll try and get out right away. So this one in particular was from $10 to $14, almost $15. And so that's a good run. That's a $4 movement. And that's, in consideration here, that's actually a big movement. In contract value, that's like $400. So I could spend $50 and make $400 on an option contract on just that move. $4 is a pretty big move. Now this was an after hours play. You would not have been able to buy and sell contracts in that time, but that is a red elephant. All right, so we talked about when to buy, when to sell. This is just kind of an idea. Like I said, you do what you want, do your own due diligence, study the market, figure out where to go, practice paper trade. That's the other thing. Webull has paper trading. before you go and throw away all your hard-earned money, try paper trading. Figure out where you might find some price indicating lines, or learn what this blue line is. This is the simple moving average. There's a bunch of different simple moving averages. A lot of people will try and trade off the simple moving average. If we break out above the simple moving average, chances are it's going to continue to move up, and when it gets back below it, that's usually a time to sell. These things can be tricky and very misleading. I don't trade off of it. You never know. Nobody knows where the market's going to go. But anyway, that's another little tool. But if you learn how to do that, paper trade with it. Give it a shot. See if you can make money, and if your predictions are correct off of moving averages. And you can make money like that. You can scalp on these things too. If it bumps across one of these lines and you make a quick 5% on your money, get out before it hits the line again. You can scalp during the day, and actually, that can become lucrative. I know I'm going over these things kind of fast. If you have any questions, please shoot them in the comments. Leave a comment. I will try to shoot a video and explain it. I'm really bad about ranting. I can make a 5-hour video really easy and talk about almost nothing. Anyway, so that was support and resistance, when to buy, when to look out for. We talked about tools, which is SPY, and price lines, price indication, how to day trade. I was going to talk about day trading. Webull is a good platform to try and start learning how to day trade. Day trading is it's fun. It takes a lot of your time. You'll sit in front of a computer for hours. But day trading with a really small account, okay, you don't have $25,000, you were under the pattern day trading rule. How do you get around that? You use a cash account. So when you sign up for Webull and you put your money in there, I'm almost positive, don't hold me to this, Webull starts you out with a cash account. What a cash account means, you can only trade with settled funds. So let's say you have $500 in your account, and you buy into a company and you sell out of that company, and you do it enough times until you've spent your entire $500, because it'll deplete while you're spending it. That cash has to settle, and typically it takes a day to 2 days for that cash to settle. But what's great about that is it's not counted as a day trade. It's counted as a cash trade. You put out cash, you make some money, you pull it back, so whatever you spent has to go into a settled funds. So they just kind of set that aside, and whatever's left you can continue to trade with until you've gotten down to zero. And then you wait till the next day, and all those gains or losses all roll back into your account the next day. And then the next day, you can day trade again. And if you compound these things, then you can have more and more money to day trade. You don't need to go all in with your money every time. That's silly. It's scary. That's far beyond risk management. I don't suggest you do it. That's a terrible thing. Anyway, that was just a real quick touch point on day trading. And how do I find cheap option contracts? I'm going to have to make a different video for that, because I really want to explain and share how I look for 1,000%er. I look for a contract that's somewhere between $12 and $30. Sometimes I'll go a little bit higher, and I look for contracts that have the potential to gain 1,000%. I found 2 of them yesterday night. I bought them this morning. I actually ended up paying almost $9 more than I was intending to get into them, but I was really, 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 really sure that they were going to go the way I was thinking they were going to go. Like I said, insurance and banks still need to have a big bounce in order to catch up with the rest of the market that has made its moves. So I got into, what did I get into? Let me just show you. We'll just go ahead and recap on the account right now. We got into AIG. I got AIG $45 calls. I think we're almost at $40 right now, and I got all the way out to July 17th on these. They were $16 at the end of the day on Friday. I didn't pick them up. They had to move over the weekend. I grabbed them at $24. I got one at 24 and one at 23, and it has already jumped up 225%. And this jump was actually within like the first 5 minutes. I think we were up 150%, and before the end of the day we're at 225%. I get to hold on to this contract until July 17th. This could go up to $50, and if it does, this will be 3,000 or 4,000% contract. And I also got MetLife, and MetLife thinks that it pays. I mean, that's kind of their slogan. And so far today, we're up 91%. That's a good move. And I also got these contracts all the way out till June 19th. So we've got, I think we got 12 days on that one. And this one's actually quite a bit closer. This is 45. I think we're already sitting at 40 as well on that one. I did a couple YOLOs. I took a $24, $25 loss on SPY today. This was a potential $500 gain. Between these two contracts, I was willing to risk $24 for $500. It didn't happen. That sucks. But the exciting part is, let's go and look at the account. 536. I believe Friday we ended at like 405. We've had some pretty big gains. Between everything that I'm holding, market holdings, we're at 336 in the market right now, and we have $220 of spendable cash for the next day. That's good. See, like I said, we're just chipping away a little bit at a time. I actually kind of started this challenge with realistically $230, something like that. I think we even go, it was down close to $180. That was including the holdings. But yeah, just eight days. We've had a pretty decent run back up past $500. Hopefully within the next week we'll be a little over $1,000, and I'll be able to show you what it's like to get into a big position. Not so much a big position, but holding on to a lot of cheap contracts that, like, goodness, just, I mean, here, think about this, right? I bought two of these. I got two of these contracts at $24. If I would have spent $240, this would have gone $770 up on the account. So $240 into $770. You know, you can't beat that with a stick. Now, if we had several thousands of dollars and we could have bought 50 to 100 of these contracts, this could potentially be $7,700. And that's how you start growing accounts really quick, by being able to put more larger positions into your portfolio. So anyway, I hope that covered any questions that anybody might have had. If there are any questions, like I said, please leave them in the comments. And all I ask in return is a thumbs up. Hit that thumbs up. Give me a like. Hook me up, friends. If you have not yet, please subscribe. And I really do appreciate comments. Comments are great because it helps me figure out what kind of stuff you're interested in, or things that I might be able to recap on videos, or what, you know, just, I don't know. Shoot me a comment. Ask me a question. But all that out of the way, like I said, I'm really sorry I recapped all this as quick as I did. I will continue to do more videos, and I'll try and go over as many topics as I can. We still haven't gotten to cover puts yet, how to bet against the market, because the market's on a rally. I don't really want to buy any puts yet. So that's it. Have a great night. Stay green, my friends.